Good afternoon, traders. This is Tony D from Easymarkets in Sydney. We have a slightly slow start to the Asian session so far today. There was excitement last night in the market that perhaps we had seen some basing in the euro and the pound and gold, but unfortunately most of that rally was undone quite quickly into the open at the start of the European session as Prime Minister May came out, denied the reports from earlier in the day that the UK was planning to stay in the customs union, gave a definitive answer that the UK was leaving the customs union, and later clarified sources that what they're looking at is sort of like a last ditch plan if they still haven't got a deal after 2020 to stick with the same rules as EU, but not staying inside the customs union. So, in some regards, it was much ado about nothing in that story, if that was the reality of it, because it's still outside the customs union, so that the UK can do uh, its own trade deals, not stuck with the same trade deals as the European Union. Now, the pound, though, although that was discounted, the pound didn't fall to fresh lows in the cycle. Found support underneath 140, 135. It was very stable, very similar price action to euro, which has been holding and finding support underneath 118, orbiting the 118 level quite comfortably. Now gold's bounce didn't get back to 1300, a little bit underneath it, but it is finding support at the 1290 level as well, and so sitting here quite comfortably as wait for further inspiration. Most of the US dollar strength and the relentless US dollar strength has been driven by those US 10-year yields that they're remaining quite high, elevated. Was at 3.12% this morning, and the outlook is for further strength going forward. If that was to continue, then the US dollar is going to remain on the upbeat. So unless it takes a little bit of risk off trading, a little bit of risk off momentum there, something that would put the treasuries back under pressure. So if there's big risk off moves, whether it's geopolitical or just stock market driven, then you will see US yields go lower, and that would help make the US dollar um, less attractive to traders in the short term anyway, regardless. So similar to say dollar yen, which is sitting at 110, nearly 111, quite high levels. If something was to rock the boat, can see fairly sharp falls. Alright guys, that's enough for today. Next week is going to have a lot more data. There's no data really of note today apart from Canadian data. Next week we'll get a little bit more information on the US economy, and as we go into later, where they're expected to raise rates in June. So we'll have a bit more of a deeper discussion on what's happening there next week.